Now you're probably wondering what's next for Bitcoin, given that it's taken a little bit of a drop and it hasn't moved. We have got probably two very important days that are going to unfold a lot of volatility in the charts. We've got earnings announcements by the heavyweights, Microsoft and Google. We've also got FOMC coming out tomorrow. And if you haven't done so, make sure you subscribe, hit the bells and all of those things, because we'll be going live for the FOMC. We'll be airing it. We'll be listening to the press conference and try and pick what good old Powell is going to be revealing about the next move. Investors are waiting to see if the interest rates will be stopped and how long they're going to stay high for. That's what the theme is. Right now, nothing much is happening. You got Bitcoin just stalling, doing nothing. Price action across the board isn't what it normally is, but this is usually what happens when it comes to FOMC, especially the day before. So today we're going to break it all down on why there could be a potential trap brewing. Let's have a conversation. All right, then. So where are we at, ladies and gentlemen? We got some very interesting movement across the board. Now, Bitcoin. Firstly, we always like to go on the daily time frame to understand where we are. Bitcoin is now coming away from that crucial 50 EMA zone, okay? Now, let me just put it like this to you. This is what I sort of expect to happen, okay? Let's just look at the events that are about to unfold. Firstly, we've got Google and Microsoft tonight declaring their earnings, all right? That will be at the close. So if we see price action dropping, could that be an anticipation that Microsoft and Google are going to declare a positive outlook on their earnings? Will they hit their estimates? Because these guys have got big market cap and they will move the market. All you got to do is just go over to it and check it out. Microsoft, look at that. Nearly 2 trillion. It's like, what's going on? And it's already moving up. The AI boom has been missed, according to Morgan Stanley. They said they were wrong. They've missed out on the NVIDIA. They missed out on everything. So because they said we were wrong, does that mean now everyone's just going to jump in because the markets are in full bullish mode? Well, we've got to proceed this with a little bit of caution, all right? Check this out. If Bitcoin follows the S&P, logic says that Bitcoin will follow and drop. If the news tomorrow suggests that the Fed will keep increasing interest rates to get inflation down because of this robust employment market. Now, we're forgetting about a couple of things here. Interest rates are at 5.5%. If you guys are in stocks, you want to really focus on stocks that have debt. So you might see it over here. Says here, Microsoft has 28% debt. Now, tech stocks, they are prone to interest rate increases, all right? So you go over to NVIDIA. Check this out. You pull up NVIDIA. What's their debt like? Well, they've got 44% debt, right? They're prone to the interest rates. That's why interest rates and tech stocks, they work together because the cost of business is going to be more now. That's what you've got to remember. So when corporate debt gets refinanced, we're going to see that. It's going to cost them more money to maintain the business. And if they're not generating the revenues, and even if they are, they still have to service that debt because of the rates of interest. That's why so many investors are waiting to see if the Fed is going to stop increasing interest rates and work out how long they're going to keep them high for. We all want that Fed pivot. We want a change in fiscal policy. That's what's important, okay? So that's the marketplace in essence. What about crypto? What's the story? Well, Ripple, or XRP, another nice little bit of an announcement. A couple of days ago, they filed for a license in the United Kingdom. That's good news. Now, I've been witnessing and watching a lot of stuff on this XRP story, all right? If we just quickly go over to XRP, and we go and have a look at the actual coin itself, you can see the structure. We had this M formation marked out, and they're sort of following the narrative, but slowly bleeding out, okay? And this is where I'm going with the idea of a trap. Let's just look at the logic, okay? Look at the dollar dominance. I'm going to the dollar futures, and you can see that they are continuously climbing up, They're not going anywhere, all right? Going to the structure, what we've got right here, which we shared to the patrons. This is the structure. Dollar's climbing back up to going back into the previous zones that they had already dropped from, all right? So when dollar drops, it means that they're putting money into assets against the US dollar. They've realized the profit on that position. Now they're going to start going back into dollar, all right? And it's always usually before FOMC. You go over to euro and you see exactly the same thing. Euro is coming down, right? Now, how does that impact Bitcoin? Well, look, let's look at Bitcoin's market cap, for example. Check this out. Total market cap, including everything in cryptocurrency, currently sits at around the $1.135 trillion market cap. Okay, so Amazon has more market cap than Bitcoin, all right? If Google and Microsoft miss their earnings tonight, okay, well, that's going to trickle over into the stock market. That will naturally trickle over into Bitcoin because whatever you say, unless Wall Street steps into cryptocurrency ain't going to go to the all-time highs unless new money comes in. The old money has been smacked about. Look, all the guys that got in at Bitcoin when we had the market cap of around 3 trillion, that was happy days right there, okay? But all of this right here could be consistent with buying, all right? So your DCA guys are stepping in. So now we've got this balance right here where there seems to be an area of accumulation potentially. Only if it doesn't get compromised. And that's what you've got to take into consideration, all right? So when you're looking at working out whether to buy or sell crypto, look at the money that's coming into it. This is probably the only chart that you should really be using, all right? Pay close attention to how much money is going in and out. If we look at this chart right here, we can say, okay then, so we know that there's some longs that have been built because they buy as prices drop from 1.2 trillion. Okay, now we're at 1.13 trillion. Now price is holding out right here. We've got this stability. So there seems to be an agreement in price right now. Across the board, people are buying up right now. That's what the logic says. Now, because we've got FOMC coming out tomorrow, 7 p.m. UK time, that is where we could get a couple of traps played, all right? What do I mean by that? Check this out. Go back into Bitcoin. Straight to the top. Go into the 1 hour time frame and look at it like this. Bitcoin's dropped and for 2 days nearly hasn't gone anywhere. It's come back down into that wick that we warned you about yesterday. And now they've stabilized. Now we're starting to see development. Look, the green vector candle right here. That tells me something has been stopped. They didn't want it to go lower. They pushed it back up. They've come back down again at that point. Because you remember, at this point in time, guys, there could be millions of dollars worth of transactions happening in that candle, all right? So they've done their deed. They've come back and recovered some of the vector to bring it back down. Now we've got a stopping volume candle. Now we've effectively got a range inside of this zone. Something's brewing inside of here. What do we need to see? Now, this is on the 1 hour time frame. We need to effectively see more of these vectors, more of these, inside of here. Why? Because then that would suggest that they're getting ready to mark up. There are two phases in the market, the markup phase and the markdown phase. You might understand it to be a bullish market or a bearish market. It's really markup, markdown. Now, depending on the time frame you're using, markup could be on the daily time frame. If we go to the daily time frame, we would be in agreement that Bitcoin is, in principle, marking up. And you see that with just the direction of price. It's not broken down any significant lows. It's not broken significant highs, but it seems to be making this continuous movement. This retrace to the 50 is important for Bitcoin. Now, remember, Bitcoin is volatile. Just because we see Bitcoin holding right now at the 50 EMA on the daily time frame, not even at the 50, it's below the 50 EMA, okay? Just because it's holding it doesn't mean that this is a point where they're going to go and bounce from. If we didn't have FOMC and we didn't have any earnings announcements, there is a good chance Bitcoin will come back up from here. But we've got too many influences that could make Bitcoin drop, and Bitcoin is good at dropping to come sharply back up. So I'm looking at this. You see this structure here? All of this zone, right, could be what's in store for Bitcoin over the next few days after FOMC. they drop it back down. They need to hold inside of this area on Bitcoin. They have to hold it. Otherwise, Bitcoin will just come down and test the next area of interest. And what's this area? Well, lots of traders that went short, got trapped, and they reversed it, and aggressively at that. So we would naturally think that if they can't sustain this zone, they're going to keep going down. And if, as I said to you, they break this range, which sits at the 24,800, then Bitcoin is going to have bigger problems and it's going to start coming down to here. The thing is, the market needs to make everyone believe that the bottom is in. Well, what is the bottom? Yeah, we know the bottom right now is at 15,000-ish, okay? So we don't really need to be worrying about 15K because we are right now at 29.1. We go into the high block to understand the liquidity over the last 12 hours. Where are traders' heads at? Let's go. Check this out. Not much liquidity coming into the marketplace. Nothing. No interest. We go into the live order flow and you can see that is evident right here. Check this out. 27 million on futures sold on Bitcoin. All right, let's look at the buys. 59 million. Ethereum, 53. Bitcoin sell again at 111 million. It's all double digits. I'm not seeing the triple digits. That's suggesting to me that people aren't actually picking up futures. They're not borrowing money off the exchanges anymore. Everyone's starting to wait. They're sitting back. They're waiting for FOMC. Now, once FOMC comes out, guys, I'm going to say it to you now. You're going to get bullied if you're not on the right side of the trade. So check this. Let's make the assumption that FOMC comes out, right? What position would you take right now based on the idea that if FOMC comes out, they're going to favor that they're going to stop increasing the interest rates, but they're going to pause, all right? So that's where this comes in. Who wants to keep hiking rates and who doesn't, breaking down the Fed's views. You're going to start seeing a lot of this now, okay? You're going to see what traders are going to be betting on because the Fed has to make a decision now. Are they going to keep interest rates at the rate that they are, or are they going to slow it down, start reducing them, but reducing them will be a change in fiscal policy. That's going to rock the marketplace. You only see already that the yields, I mean, look, the yields themselves are going up 4.89%. And the more that these yields keep going up, the less money that the US government is going to be getting. Like I said to you yesterday, look, it's going down. People are offloading on the bonds. That means they're not picking up assets that the government is invested in. That's naturally going to be reflected in what? Let's go to the S&P and NASDAQ. Look at this. S&P right now, currently pulling back to the 50 EMA. Now, from a technical standpoint, we'd look at this and say it's still good, all good. Everything's all good for S&P. Could be the nice little drop down, come and hit the liquidity over here, get ready to make a move back up again. You know how the S&P and the NASDAQ work, okay? That's what they do. The market ain't even open yet, and we've already seen this drop, but we've also got news announcements for Google and Microsoft, which could influence the way the S&P and the NASDAQ are going to operate. Now, going to the NASDAQ, basin. It's going to be a quiet couple of days, guys. Wouldn't even expect Bitcoin to do that much. And if Bitcoin does decide to make a little move at top side, we got one today, they ain't even broken into the vector candle zone. So you really want to be paying attention to Bitcoin once it gets above that region. Remember, psychological area. We've already been given a clue that that zone is an area of resistance because they've sold from it. This area right here is going to decide if their intention is to go higher because they've sold off aggressively below the psychological low. That's consistent with going long. You go back in all the other weeks where the psychological areas have acted as support and resistance. Look, they've been building shorts in this because they traded above and then they ripped it down, okay? And the impact of that followed on. And they kept on going lower. Now this week, we've got them trading below the psychological range and an aggressive move down. Could be preparing to start marking up. The only way that you would validate a test to the psychological low is if price can start working its way up towards the 50 EMA and see green and blue vectors. Because the green and blue vector is suggesting that there's a change in the behavior here. The stopping volume candle spikes price up. They're going to try and come back up into that zone. That doesn't mean you're going to trade that. It's on the 1 hour time frame. Don't really get that much of a big move on that. Let me just check it. Look. Yeah, $115 move in Bitcoin. No thanks. If you're trading with leverage, you're going to get smacked on your fees. What's the point? Okay? So you want to wait until Bitcoin can clear that range, but there's clearly intention to try and mark up above the daily open. Something's brewing in that environment, okay? Going into smaller time frames, you make sense of it. Look at how price is stabilizing, all right? Moving averages, compressing. Where are my vectors? Look, I'm starting to see it. Green and blue vector candles are appearing. One there, and you've got one here as well. There seems to be an agreement, but you cannot dismiss this wick because that's what they did yesterday. We saw that wick down there. They came back into it. Then they moved back away from it. They could do the same here. You'd want to see them holding out here. They seem to be hugging this 50 EMA and the daily open. Something is developing here. And this is what you look for. I look for this where I'm working out if volatility is going to come in our favor or not. Okay? You go into the daily time frame and just look at how Bitcoin's behaved today, and you're seeing that it's already stuck inside of the previous session. That's good news. So they haven't gone below it, they haven't gone too much into it, but it's inside of the previous day's behavior. So that's good news for us. We want that. All right? We're going to anticipate that if Bitcoin can get above the daily open and close above it today, then they could be holding the chart, preparing price for FOMC to spike up to recover some of the imbalance inside of here. Go down different time frames to try and see what this candlestick is. Look, 20-hour time frame. Is it a red vector? No. Yes, it is. Okay. Now we've got a little bit of structure for the short term. Check this out. Take a Fibonacci, find the midpoint, and work out. Okay. At most, we would expect Bitcoin to try and make its way back into the 50% zone from now until FOMC. That's what you would naturally expect. But Bitcoin, because we expect it, doesn't mean it has to happen. We're just anticipating that they've been marking price down, but they've stopped now. There seems to be an agreement in this zone. We look left, and we know that we're already in a vector candle zone. All right? So liquidity could be had. We go back into the Fibonacci point, take the high. Whoops. Take the low. Where does that meet? Well, it marries up to that point of interest right there. So what does that tell me? That tells me that both of these candlesticks, that midpoint is usually where the move started, because this wasn't a vector candle straight away. It became one. So you can imagine when price, and this is why you got to focus on the speed of the way the candle develops, right? If you're witnessing price making a move up and down, it's slowly on the candlestick, it's not really getting attention. But when you see a big spike move, okay, that's usually market maker filling orders and hitting back people's previous liquidity, okay? That's what you want to be looking for. You want to look for the speed of the candle. Look, go to the 5-minute time frame. Now that the market is just about, well, in 10 minutes time, the market's about to open, okay? You got a green vector candle here. You got a red vector candlestick right there, which is the wick on the 1 hour. We're only assuming Bitcoin's going to come back up towards that point because that is an area where buy side liquidity have it, could be sat because that's where people's stops are. You're looking for stops. That's all you're looking for. And traders that have gone short right now are going to start paying the price for going short because they're not taking the money. They may have gone short in this area right here because they needed confirmation. So now their margins are open. And that's where market makers are starting to take those margins inside of that zone. Okay? That's what you're looking for. And as long as Bitcoin holds, like look, the 5-minute time frame is starting to give us more now. So green, look at the green vectors. They're all appearing inside of this zone. Every red candlestick that appears is pushing price lower, but it's not. See what I mean? It's not breaking down. It seems to be forming higher lows. Look, keeps on holding out. So the structure of what's going on in this zone is giving you clues that it could change. We might find a balance. They might move Bitcoin up to only bring it back down in time for FOMC. All right? Microsoft and Google tonight could bring volatility in Asia. That's what you're looking for. Don't just straight away look at the chart and say, right, we need a Fibonacci or we need this trend line. Ask yourself, what is retail thinking inside of this area? Are they trapped? How many times can you see them going for a zone to keep the idea that price is going lower. Because that's what you've got right now. You haven't got anything else. You've only got the fact that this is a range. Cool. Some of you might even do this. You might say, okay, there's the high of the range, there's the low of the range. With that wick down there, I'm going to trade this. If Bitcoin breaks above that point, I'm going to set a target. So set an order here in anticipation that if it breaks it, cool, I would get a move up, retrace back into it, and then continue up towards the 800 EMA. Happy days. I'll take a nice little quick scalp from that. All right. Or if they do break down in this zone, I'll set an order to go short, and then happy days, it will make its way towards the average weekly range low or the range daily low. Okay. That's what people are doing. But you've got to ask yourself, who's in here right now trying to go short? Because there are people that are impatient. They want the action now. And when you start seeing the candlesticks moving away, look at this, a big green vector there. So something's happened here. There's been a transaction. Has this candlestick been held or presented to us because it favors higher prices? Is market maker triggering the algorithm to hold price in that zone? Because he's got orders all over the place. He's got orders up here and he's got orders up here. He might have a parent order that needs to be fulfilled by the end of the day, and he's looking to use several child orders because that's what they are. They call their big orders. They call it a parent order, and then it's split into child orders. So if a parent order of 100 million will be split into child orders, 10 million, 10 million, 10 million, 10 million. And they will say that we've got until 1 o'clock this afternoon to get those child orders pushed out because they're smaller. They won't impact the marketplace. Now, you got a little movement right here. So then we would assume that that's a point where we need to start paying attention because something could be changing right now. It's been dropping down, right? So we're going to look at that and say, okay, I'm going to pay attention. I'm not going to go long or short. I'm waiting to see if this is going to give me the idea that they're going to try and work their way up. Because if they work their way up, they're coming away from this structure. One would be of the idea that they're going to try and attack other bits of liquidity inside of these zones. Because Bitcoin hasn't done anything for 2 days. It dropped yesterday morning and then it just stabilized going sideways. All right. Going over to Ethereum. Ethereum moves a little bit more better than Bitcoin. And you can see Ethereum's already been getting into the flavor of doing the stop runs. Look, notice how Ethereum repeats it once, does it once, then does it again, but this time higher. So the logic says that we expect Ethereum to do the same thing again because they're working the stops. Look at how much of the vector they've recovered here. They've taken a lot of it. And in my opinion, I think Ethereum and Bitcoin, out of the two, you're better off trading Ethereum. Straight up. Ethereum is so much more superior in terms of movement than Bitcoin because Bitcoin doesn't do nothing. It's a stable coin. It doesn't behave. It's actually doing what it needs to be doing. You know, it's just a store of value. That's all. All right. Quickly now, we've got 5 more minutes until the market opens. Let's just go and have a look at what's going on. We've got gold. Treacherous behavior with gold, stop run up and down. That's usually what happens with gold, especially prior to FOMC. They're staying within certain ranges. Wait until FOMC before you start playing with gold because you might get caught out in this treachery. Let's go into a couple of assets in the pre-markets. Tesla is going to be looking at gapping up, and that would make sense with the S&P actually dropping. So if we go down to the S&P right now, we would assume that S&P has been dropped to effectively come back up. They've gone and hit this previous liquidity right here, trading aggressively away from the daily open. So in the next 5 minutes, we're going to know if the S&P has been set up to come back up because that's what they like to do. They like to drop it down. We just quickly go over to the EXO charts to understand where we are in that. So Bitcoin, we just get Bitcoin back up for a second. Hold on. All right, so Bitcoin's right there. Let's get EXO charts. Where's Bitcoin at? Right. I'll get bookmap up, but I've got a bit of a problem with my bookmap. Don't know why. Anyways, right now, Bitcoin is sat at the VWAP of the profile in terms of order flow. So we're expecting some interest. This time, point of control is close to the VWAP. So we've got a lot of activity happening inside of here. Now, we can justify that with the green vector candle. Something's brewing here. All right? They've gone down to find some value. No one's really interested there. But there's more interest up here. So then the logic would say that if Bitcoin can sustain this point, we would see it move higher. 853 contracts at 29,137. Right now, at the VWAP, there's 875. So the VWAP and the point of control could be prone to change. It's just about what point will it come in, as in the liquidity, because we're very close to the peaks. And that, what I mean by peak is peak amount of volume, 880 on the VWAP. Well, there's 853, so another 30 more contracts up at that point right there will move the VWAP in principle, okay? We haven't got the problem of the point of control all the way up here. It's all close together, suggesting that there's nothing for us to do just yet until we see some activity. We've had some of it right here, if you can see. And now we're waiting to see if they can follow through. If Bitcoin can break this value area high, then they'll start hunting for the value to go higher. That's what we're looking for, okay? Markets right now, where we at? Hold on. 3 minutes. Quickly go over to the NASDAQ. Where we at? Hold on. NASDAQ, where you at? Here we go. NASDAQ comes down. I'm going to sneeze. Not a test of the daily open. Comes back into the last consolidation. Happy days where they last moved from. Hitting the stops. People going short. Reverse it. All right? So it's all starting to pick up. So they moved it down before the market opens to prepare it to move it back up again. This is what the game is. Dollar futures going up. Where are you going to be placing shorts, ladies and gentlemen? You're going to be running shorts on Euro. It's breaking down. So the idea is that dollar dominance is going up. Investors are seeking cash. We go over to the pound. Sorry, we go over to the yields. Yields are climbing up. That's not a good sign. All right. 10-year bonds going down. It's not looking good. This all could be in preparation for FOMC. We want to see the yields crash. We want the yields to drop because then that would mean that people are buying the bonds and they're giving the money to the government. Bitcoin coming up. It's doing okay. That's on the 1 hour, 15 minute. So far, so good. Like we said earlier, green and blue vectors. Are we seeing anything? Stopping volume candle on the 15-minute time frame. Okay. No test of the daily open just yet. Go down to lower time frames. Any more vectors? No, just a blue one right there. Holding out. We're going to wait and see if they can break. Come back into this point right here. All I've done is just shown you where traders are going to think it's going to go based on their commitment of coming into the chart. That's all you've got to try and do. Sounds easily said than done. I get all of that. But experience will give you that when you sit in the charts and look at past behaviors. Yes, hindsight, it's an ass. I get it. But you can't. There's nothing here. You're trading this. This is what you're trading. The unknown. Whereas when you look back, they're always going to buy and they're always going to sell. They can't deny that. They can't stop that. You go back, find your time frame, go back and look when they previously did. The same thing right here. Okay? So let's go back and do it. Something similar right here. Go back. Here we go. What have we got? So at this point, what did we say a few moments ago about Ethereum? Ethereum comes up, comes down, and then moves up again to hit the orders, right? Look what Bitcoin did here. It come down, moved up. There's the first zone. Did the same thing again here. Happy days. Tried it a little bit over here. Not that much success. Then they went for the peak. That was the peak right there. They come back and recovered the vectors. Happy days. And then they brought it down. The same logic is happening right now. That's what they're preparing for. They're giving us the clue with this zone right here. Now, markets are opening up. Here we go. We've got some flavor. Let's see what they're going to do for us. Let's just get this up. Here we go. Let's have a look. S&P, NASDAQ holding out. Let's see if Bitcoin's going to start making the move up, ladies and gentlemen, towards the daily open. What time is it? 31. I'm going to try and sit with you guys for another 5 more minutes. Here we go. So what we just said earlier, okay? We're looking for the commitment to start rolling in. Are they going to do it? NASDAQ starting to make a bit of a move. Bitcoin's coming up now. Remember what we said about the value area high. This is where value is. So we're going to expect Bitcoin to try and take the value here because it seems like there's people interested in this zone. We justify that with the red vector candle region, okay? Now, what I'm talking about right now is it's ideally for scalping, okay? Day trading Bitcoin, all right? Holders might think, nah, it's no good for me. A quick move like that ain't going to do anything for me. But the same policy applies. We're just looking at it from a smaller perspective. We're looking on the 5-minute time frame right now with Bitcoin. So the logic says that we expect Bitcoin to move up from this point, okay? So we've worked it out in principle. What have we got? Look, S&P starting to climb up. NASDAQ has made a nice little flavoursome move up. Orders are all coming in. Word on the street could be Google and Microsoft could be hitting their estimates and even surpassing them. So they've dropped price to effectively lift it back up again. We've not done anything other than recognize the way the market maker induces, how he lures you into a position. And this whole range right here with Bitcoin is effectively coming into fruition, okay? Just by, look, green vectors now. We got the clue here, yeah? We've got the idea, the VWAP, the point of control. We need to break the value area high and flush out. That's what we want. We want to see them go back up. If they can't surpass this point up here at 29,282, we've got a problem. It will then go back to the idea of them going in for the stops to effectively bring it back down into the range. When you see them break out of this range, do not ignore the vectors. This is what I mean about also speed of the candle. Look at how quick it moves. Focus on the way it penetrates the highs of the candlestick. Look, it's holding out right now. Not doing much. Wasn't that a candlestick a minute ago that was showing movement? Well, why is it slowing down? I want to start seeing it come, going a bit faster. Here we go. Now we've got what? 2 minutes until that candle finishes. If it doesn't finish at the highest point, they're just running for stops. Because if it finishes at the highest point, it would then make me assume that they're getting ready to work higher. So the next candle will confirm that, okay? Here we go. Come on. Bitcoin slow again. Where's ETH? See, Ethereum does it a little bit better now. Here we are. Come on. Now that's coming back up into that point. They've paused. It's nice. The first order is usually the cash infusion in the markets. Okay, here we go. See, look, Ethereum is going higher and closer towards the top of that candle, suggesting that they're doing something to induce. They're stepping in. Guys went short a few moments ago. Now they're taking and making them pay for it. Okay, so let's see if Bitcoin can follow through with that. Now Bitcoin's doing it. Good news. That's good. Now we said they break the value area high. They're going to flush out to try and eat the liquidity up here because that's where traders are currently at. There is value up here. There wasn't any interest here. So we have to move to the next point. And that's what the market does. Okay? Are we all on the same page, ladies and gentlemen? Are we all on the same page? Yes, some of you might look at this and be like, yeah, go short, go short. But look, there are two ways you can grab this. You could have caught the long on the idea of this green vector candle. Now, look, this is speed. This is speed. Look, this is the speed of the candle. Look at how quick it's trying to get ground. This is what we want. This justifies them trying to go for the zone. Okay? We want this. Because if it took them long to come up towards the daily open, I wouldn't be paying attention to a trade. But I got the clue earlier on with the green vector candle right here, suggesting that this is going to lead to a succession of 3 movements. So the first move here, the second move. So logic says I expect after this candle, another move to go higher. Does that make sense, guys? We've not talked about no indicators other than the candlesticks themselves. Okay? Just understanding market makers' ways of getting you committed in the chart. There's a balance. Now there's an imbalance. Look at that close on that candle. Strong. They're not finished. Okay? This will lead Bitcoin higher. We said value area high. They will flush the liquidity and go up. Remember, ladies and gentlemen, this is your last chance to join the Patreon because we're going to be moving over to the website. Those of you that do become patrons will be getting benefits when we get over to the website. It's happening very, very soon. But other than that, guys, I have to go and get my daughter. I hope this makes sense. All right? Have yourselves a wonderful day, guys. Mad love and respect. Peace.